Joining us now, Larry Kudlow, Director of the National Economic Council. Larry, welcome to the program on a very difficult day. Are the markets down, at least in part, because the Democrats took the House?
Well, Stu, that's a very political interpretation, and you know I'm completely non-political. I will say this. I don't see, after the election results, I don't see any evidence whatsoever that President Trump's pro-growth policies, namely lower marginal tax rates, particularly for businesses, a complete rollback of onerous and burdensome and costly regulations, and a new opening for energy revolution. America's going to be energy dominant. We're probably already there. Now, those are key economic growth building blocks. That's why our economy is growing now at 3% on a year-to-year basis. What, 4.2 in second quarter, 3.5 in the third quarter. So I don't see anything that is going to overturn the Trump revolution in economic growth policies and
Larry,
incentives.
But we're not going to get anything new. If the Democrats run the House, and they do, we're not going to get any new stimulus. We're not going to get any more tax cuts, are we? That's the problem here. And by the way, Goldman Sachs is saying that by the end of next year, our growth rate will come down to less than 2%.
You know, my colleague Kevin Hassett of the CA had some choice words for Goldman Sachs and their partisan forecasts. 4% under Obama. Our plan, Trump, wouldn't work. But I'm such a nice guy, I'm not even going to go there, Stu. All I'll say is this. It was only a few weeks ago, I believe I was on your excellent TV show, we had 250,000 increase in non-farm payroll jobs, right? Yep. 3.1% wages, 3.7% unemployment, okay? Those were huge numbers. Now, I acknowledge there's a stock market correction, and I don't like to see anybody lose any money any time, but these things happen, they come and go. I'm just saying the psychology in stocks has gone down a bit. The economy is roaring. Here's a stat, Stu, okay? Let's do one quick stat, okay? Industrial production, all right? Mines, factories, output, and so forth. Business equipment spending, which is a proxy for CapEx, which is really the thrust of our entire program because business investment is what spurs blue-collar workers and so forth. 5 straight monthly gains, last 3 months to 13.1% at an annual rate. We are regaining the CapEx boom, which will lead to more productivity, higher worker wages in real terms. Blue collars, they're the ones who are benefiting the most from this expansion. None of this has changed. Okay. I understand you got a tech correction and so forth. I'm not going to comment on that, but I'm just saying the economic fundamentals remain so strong. Let us not lose sight of that. We are nowhere near Goldman Sachs notwithstanding.
If the fundamentals are so strong, and you make a strong case.
I'm too nice a guy to criticize Goldman Sachs. But Goldman Sachs notwithstanding, we are doing very, very well right now, and Americans know that.
If we're doing so well right now, and we're going to keep on doing well in the future, why is the stock market selling off like it is?
Stocks sell off, Stu. You and I have been along so
But has it got nothing to do with the economy and the Federal Reserve?
You know, look, I don't want to go through the architecture of this correction. It's not really my job. A lot of people are telling me, pals on Wall Street, that the big tech stocks, the so-called FANG stocks, are way overvalued, and that's had an impact throughout. I don't want to get into that. Corrections come and go. If I'm not mistaken, Stu, you tell me, we're off, what, 7-ish% overall correction? That's not the worst thing I've ever heard. I mean, 10% is official, 20% is a bear market. All I'm saying is don't let a temporary decline in stocks
You think it's temporary? You think is there a bounce back coming, Larry? If it's temporary, is there a bounce back coming?
You really want a Kudlow forecast, don't you?
I do.
You really want one?
Yes, sir.
Well, I'll tell you what. To quote my former boss when I was here 35 years ago, the economy is very sound. That's the way I would look at that. The guy's name, by the way, was Reagan, and he was a quintessential optimist, and he lowered tax rates and regulations, just like President Trump, who was also a quintessential optimist.